Good morning, Cindy Birkland here with cindybirkland.com. And I have again my favorite loan forgiveness guy here, Carl Dimailig. And we're going to be talking a little bit more. We're going to go next level into public service loan forgiveness and how we make all of this work. Because a lot of people think, well, I'm not a public service employee, right? So how do I make this work? Because this is to me one of our most favorite programs, right?
Yes,
And
absolutely.
yeah, so we are going to talk today exactly about how we make this work, because there's always a way to make something work if you know what you're doing. And Carl is such a rock star at this, and I'm so proud that we've teamed up and we do this business together. So, Carl, take it away and kind of explain to us how we make public service loan forgiveness transactions work for somebody trying to get this student loan gone.
Great. So let's recap on what everyone has to do to qualify for public service loan forgiveness. You need a qualifying loan, meaning direct loans only. So if you have the older federal family education loan,
Yes.
they don't qualify.
Okay.
You need to have qualifying employment, which is what we'll talk about, but you also need to make qualifying payments, which means in full and on time. And in full can be zero, by the way.
Right.
And then the last one was in one of the qualifying income-driven repayment plans, which is the one which is based on your adjusted gross income. And most of those are under your control. One of those is not, your employment. And let's say you couldn't get accepted at a qualifying employer, which is government. You're not going to create your own government.
Right.
A 501c3 tax exempt organization, or another set of specific 501c3s, or let's just say you'd rather be an entrepreneur. Well, you can still qualify for public service loan forgiveness because you also have the ability to work two careers. We hear about it all the time, which is dangerous in healthcare. Nurses having two full-time jobs.
Yes.
Entrepreneurs are used to working 60, 80 hours a week anyway.
Yes.
So if part of your entrepreneurial work is cause marketing related things where, hey, I take pictures of animals and I also want to create a book highlighting endangered species, well, that could be a charitable cause. So let's go right to what qualifies, other than government, is a 501c3 tax exempt organization. Now, I didn't say nonprofit. We'll get into that later. But it has to be tax exempt under 501c3, and that is a tax status. Okay, it's not an entity. And when you do get what's called the determination letter, it's the best letter you ever get. It'll say, "Dear applicant," and this is from the IRS. It says, "We're pleased to tell you you are exempt from federal income tax under 501c3. If your entity has that letter, that qualifies for public service loan forgiveness. Then it also says donors can qualify for charitable donation deductions under, I think, 509A, and then 501c3s are further classified as either public charity or private foundation. And if your ultimate goal is public service loan forgiveness, either will qualify, but if it's like generational wealth, you want to use the one that Gates, Buffett, Zuckerberg use. That's a completely separate conversation. So depending on what your end goal is, you'll need one of those. You'll need the 501c3 status. So let's go backwards now. I said 501c3 is a tax status. So I'll give an analogy. So is an S corporation. That's not an entity, that's a tax status. But what is a tax status on? Well, an entity of some sort. So let me stick with S corp for a second. You first have to go to your Secretary of State and create an LLC or a C corp, and then write the IRS a letter electing for S corporation tax status. That's exactly how it works with 501c3. You can either go to your Secretary of State, and this is what 99% of the people do, and they use articles of nonprofit corporation.
Okay.
Then you go apply to the IRS for 501c3 tax exempt status, and that's when most people say, oh, nonprofit. It's like, well, yeah, that's what most people use. And then the other option, which very few people use, is called a charitable trust. It's not one of those name-branded charitable remainder trusts, but that's the other option. Now, there's two things to stay qualified to be exempt under 501c3. One, you at a minimum have to do everything the IRS says.
Okay.
That's the bare minimum. Then you also have to do what your Secretary of State nonprofit articles of corporations say. So if they want to up the ante where they say, and I'll use California as an example, they say you have to have a board, if you intend to take a salary, which you have to qualify for PSLF, you must have a board of directors of at least 3. No big deal, but it says 2/3 must not be family. So if you're a married couple, you need a board of 6, and just hope the other 2/3 don't fire you. But that's really what it comes down to. You have to be a W-2 employee of at least 30 hours classifying yourself as full-time. That's important because I have a client who works for a 501c3 school for 32 hours a week, but they classify her as part-time, partly because they don't want to pay benefits.
I see.
Now, the benefit of creating your own charitable organization where you're in charge is that you're not going to fire yourself.
Right.
You have control to be there for 10 years, and you get to choose the causes you care about specifically because you created the entity. And if you're an entrepreneur, you tie it in with your for-profit business. I'll just give an example. Let's say you're a realtor. There's a lot of realtors out there, and people love the one that they know the most.
Mm-hmm.
So someone that just meets 5 realtors, they're going to probably remember whoever stands out to them for personal reasons. But if one of them says to you, did you know that I donate $500 to a local animal shelter every time I close a house? That alone will let them stand out. It's called what we call cause marketing related. And if you do this through your own charitable organization, or you even create that charitable organization, then you're telling this potential client that, yes, I do what I do because I enjoy what I'm doing, but I also care about the community we live in. So if I'm going to get a deduction, I might as well get a deduction for something I already care about, but also in a roundabout way helps me market my for-profit business.
I love that. I love that.
So even not as a government employee, you can still qualify for public service loan forgiveness. It's a little more difficult for someone who's already an employee somewhere else. Doable. Just the numbers don't quite work out as well as if you were an entrepreneur or self-employed running your own business. So there's a lot of details, especially being an employer, because you have to worry about workers' comp, unemployment. But I've already gone through that. So
well, and here's what I say about this. We can really get in the weeds on this. Like, this sounds like a lot, but the bottom line is, if you got $100,000 student loan or a $300,000 student loan, and you hire someone like Carl and myself, we do all of this. We set everything up for you. Yes, there's fees involved, but if we're getting rid of a $300,000 student loan, you don't have to do all this stuff. This is stuff that has been set up for you. And the next thing you know, on the other side of 10 years, your student loan is forgiven. And the benefit is you're not paying tax also on the forgiveness. Huge. Because on a $300,000 student loan, your tax on that could be $80,000, $100,000 or more. And we never want you to get in trouble with taxes. Oh my God. So it's really important that you hire a professional when it comes to getting this kind of stuff done. This is not difficult for Carl.
Yeah.
It would be difficult for you trying to get rid of it, but it's always important to contact a professional, especially on numbers of this size.
Yeah, and when you really think about it, you hopefully, and this is just me projecting, you don't work for the money. You work for what you can do with the money. Take care of your family, give back to your community.
Yes.
That's really what it's all about. And if there are legal ways that are in the law, the letter of the law that says you can do it this way,
why wouldn't you?
Yeah.
Right. And that's exactly why business owners have the write-offs that they do, because legally they can do that. And it's all part of being a business owner. Those are the perks of being a business owner. There's a lot of, things that aren't so great about being a business owner. But the reason people take advantage of that is for less taxes. The less taxes business owners pay, the more people they can employ. So it all works, for the greater good. But that's the same purpose of this, is just really working with someone that really knows what they're doing. So I appreciate you, Carl. Anything more that we need to know about this in closing?
Well, if I open my mouth some more, it could be another 20 minutes.
So So we can always have another podcast for something okay. But we want you to know that with public service loan forgiveness, there is a lot to it, but a lot of people can take advantage of this. It's just about getting with a professional. So if you like what you heard today, please get a hold of me at cindybirkland.com and let's see what we can do to support you in loan forgiveness today. Cindy Birkland here. Just wanted to say thank you for watching the channel. And if you want more content, just need you to click right here. And don't forget to subscribe to the YouTube channel, clicking right here. If any of these conversations have interested you, please get a hold of us at cindybirkland.com, or you can reach me at cindybirkland@gmail.com. Thanks again for watching.